We've got a high degree of uncertainty when it comes to what is happening in the US economy. We're watching what is happening with the Sun Belt. We saw the claims number. Looks like we're stabilizing at a fairly high level. What does Congress need to do? What does Washington need to do in terms of the next round of stimulus? What kind of a package would you be looking for?
Yeah. Well, you're absolutely right to focus on the uncertainty. And it's not just that it's high, but it changes. So any increase in uncertainty will make anybody thinking about hiring, anybody thinking about opening up a business again, making an investment, all of those people will hesitate when uncertainty goes up. So what the Congress needs to do is reduce the uncertainty. A lot of the uncertainty right now is because of this tension over what to do about unemployment compensation. And this is a case where the reasonable people can differ. They're going to have to come to a compromise over these two positions, which is that it's good to help people when they're in distress. It's good to provide stimulus to the economy, but it's not a good idea to pay people more to be unemployed than they would have gotten on their job. And so they're going to have to resolve that, but they need to do that soon and not add this uncertainty. What happens to the unemployment compensation? Don't add that to the other uncertainties in the economy we face.
So,
the other thing, which is, well, go ahead. Yeah.
No, sorry, Paul. Go up, finish your thought.
Well, the other thing that will be part of this package could be some liability protection, which might be a good thing. Lawsuits are not going to help us end this pandemic. And it also would be very important to include what both the Senate and the House have been talking about, which is another $75 billion for testing, because this is one of the ways we know where you can open things up, like open up schools, open up businesses, and yet not cause more spread of the virus. You just test more people, isolate the ones who get infected.
So let's get back to what we're going to see in terms of the unemployment and the payroll protection program. So one thing is we just got to get more loans to companies. My issue is we've seen a lot of companies start to take these loans and then still wind up having to lay off people down the road. Is going through companies and banks the right way to go? Would it not be more efficient to just start cutting more checks to people?
It probably is kind of a wash. If you pay firms and say keep paying your employees, you give them that money for a month or two, and then you stop that money, they're going to just delay the layoffs. But in the process, you've given out some money. I think for the sort of the simplicity and probably for the sense of equity, you might as well just bypass the firms, as you say, and just give that money directly to the individuals. The alternative is that you could make a long-term commitment. The government will pay the employment costs for all employees for all firms. Some countries have tried to do this, but we are very unlikely to do that in the U.S.
Paul, how do you convince people to spend the money that they get and not save it? The savings rate is shooting up, and I was really interested to look at the China data a little bit earlier on as well. A country that has been able to clamp down harder than most on the virus, but still struggling to convince consumers to go out and spend.
Yeah, this gets back to this problem of uncertainty and fear. If you don't know how bad things are going to get, it's natural to want to just hold on to all your resources just in case you really need them down the road. So what would be so helpful is if we had a clear plan that we knew was sustainable that we could stick to for the next 6 to 12 months. Assuming we don't get a vaccine in that time period, but a plan that will protect us from this risk of opening up and then spread of the virus and then another round of lockdown.
So when you talk about the stimulus, it brings us to the labor market. And what we have seen here versus other areas are really labor flexibility when it comes to the U.S. Versus Europe, where we don't have that, but workers tend to stay employed. The thought, if we were going to get a V-shaped recovery, is that the U.S. has it maybe a little bit better with that kind of flexibility. What do you think?
I think the flexibility of the U.S. labor market, which shows up in terms of large numbers of people who leave jobs every month, but then large numbers who get new jobs. This is a real asset for the U.S. Economy, and it's very helpful for young workers It's easier to get a first job in that kind of economy. It's easier for lower skill workers. So it's an important part of our economy. So we want to maintain that churn of lots of people leaving jobs, lots of people getting new jobs. And so as they think about these issues about how to bring in the unemployment compensation, people are correctly thinking about how do we protect the churn. There's some talk now about let's switch to rewarding people for getting a new job. All of these measures can create some bad incentives, and they also raise questions of fairness. If you're giving money to the people who got a new job, the people who stayed on the job may feel like, well, I got left out. Some of them may even quit then to go get a new job and get that new payment. But this is at least a route where you're encouraging that flexibility, which is a real asset for our economy.
You bring up an interesting point, and it kind of takes me towards a compare and contrast with Europe. We had Christine Lagarde talking a little bit earlier on. Let's take a listen to what she had to say.
An ambitious and coordinated fiscal stance remains critical in view of the sharp contraction in the euro area economy. The Governing Council urges further strong and timely efforts to prepare and support the recovery. It is important for the European leaders to quickly agree on an ambitious package.
Paul, is Europe ahead of the curve? We're finally getting a fiscal response. We have schemes in Germany like the Kurzarbeit scheme, which is a scheme that has existed for a long time and has therefore allowed automatic stabilizers to work quite well. Europe seems to be managing its virus spread a lot better as well. Would you say that Europe is going to come out of this faster and stronger?
Oh, I think definitely. They'll certainly come out faster than the United States, and they may even get some structural advantages as a net plus coming out of this. And you just can't underestimate how important it is to sequence this correctly. We have to deal with the pandemic, with the virus first. There's no way we can get a recovery of the economy until we've got the virus under control. And the problem is not just that government officials are going to tell people not to do things. People will not do things as long as they're afraid. So they'll save. They won't hire. They won't restart businesses. So we really do have to focus on a sustainable plan for dealing with the pandemic.
Do you think that view that Europe really has it together and will come out of this better than the U.S., is that widely thought currently? I'm just trying to get a handle on it from an investor point of view, where we've seen flows start to move into Europe, move into the euro, and I just wonder how much of that is sort of left to transfer.
I think the biggest cost from this pandemic is not yet apparent, but what it will be is a loss of faith in the capacity of governments to make things work. And, we had a lot of distrust of government. We had a lot of populist antipathy to government after the last financial crisis. After this one, I think it will be worse. This is, I think, the place where the Europeans are going to have a real advantage compared to the United States, because, frankly, there have been a whole series of steps where throughout the U.S. government, we've seen just total failures to act. You mentioned a minute ago automatic stabilizers. This is a very simple idea which helps give people a sense of confidence, because you know exactly what will happen if the unemployment goes up or goes down. You don't have to have some contentious battle and everybody on the edge of their seats every few months when they try and see, are we going to do something about unemployment or not? So it's just totally counterproductive to belief in our institutions that we don't have more automatic stabilizers that give people confidence. And in fact, what we have instead are these little partisan crisis battles every so often.
Paul, we were talking earlier on in this program about the huge amount of credit issuance that there has been as a result of the crisis. Now, what companies use that for remains to be seen, but some of it was required out of desperation, some of it was required out of a desire to see opportunities. Governments are also having to raise huge amounts of debt as well. Central banks, therefore, are in a bit of a bind. They have to keep rates low because of the level of debt. But at some point, this huge amount of money supply, I'm assuming, is going to be inflationary. How do we deal with that? How do we deal with that potential stagflationary environment that could potentially be coming down the pike towards us?
Yeah. Well, one of the things I do as part of my job is I try and keep track of where I was wrong. What was I thinking a while ago? Like, you write it down so you don't remember it incorrectly. You write it down. So one of the things, I thought we were at risk of something as bad as the Great Depression. Now, the unemployment numbers have been high, but not as high as the Great Depression. But the key difference is we haven't had a financial panic. So I think the first thing to say is that central banks are doing a much better job of keeping a shock to the labor market, a shock to business activity, from translating into a liquidity crisis and a financial panic on top of the underlying shock. So this is a real case that's, and it's the opposite of what I was saying a minute ago. I think central banks have actually done very well in the U.S. and in other parts of the world. Now, as you say, though, the success now could turn into a liability in the future. We're a little bit borrowing from the future, getting some advantages now that could give us some problems in the future. I don't think inflation should be the biggest concern. I would worry, though, that we may, by increasing the amount of debt, by kind of rolling over debt for all of these zombie-like firms, what we're doing is we're delaying the risk of some kind of financial contraction that has to take place. So as long as the central banks keep track of that and approach that in a kind of a gradual way, I think that's a manageable problem. But it would be good if we could find new ways to provide liquidity, to prevent a liquidity crisis, which don't increase our exposure to debt and further panic down the road.